This is your weekly crypto and macro news brief for June 29 to July 5, 2026. This video is for news and education only. It is not financial advice. This week, the market story was simple: fear early, relief later, and selective rotation into stronger narratives. The top headline was Bitcoin's swing from stress to relief. At the start of the week, Bitcoin traded below $60,000 as ETF outflows and macro uncertainty weighed on sentiment. CoinDesk reported that June became the worst month yet for U.S. spot Bitcoin ETFs, with about $4.5 billion in net outflows. Then the tone improved. Cointelegraph reported that U.S. spot Bitcoin ETFs crossed $200 million in daily inflows on July 3, the first time since May. That does not erase the outflow trend, but it did help the market stabilize. Macro was the reason the rebound mattered. The Bureau of Labor Statistics scheduled the June employment report for July 2. The Guardian reported that U.S. employers added 57,000 jobs in June, about half of economist expectations, while the unemployment rate moved to 4.2%. The Wall Street Journal reported that the Wall Street Journal Dollar Index fell 0.47% to 97.25. For crypto, a softer dollar and lower rate pressure can support risk appetite, but the Federal Reserve still has to watch inflation. The broader market was still cautious. CoinMarketCap showed total crypto market capitalization near $2.17 trillion, with Bitcoin dominance near 57.87%. Stablecoins remained the main liquidity rail, with CoinMarketCap showing stablecoin volume at roughly 99% of daily crypto volume. DeFi Llama showed total stablecoin market capitalization near $311.3 billion, down 0.62% over 7 days. That means liquidity is still active, but not clearly expanding this week. Inside the top token universe, flows were selective. CoinDesk reported that XRP-linked ETFs added $59.4 million in June, while hyperliquid's HYPE funds added $161 million. That made XRP and HYPE relative bright spots while Bitcoin and Ether funds were under pressure. Cointelegraph also reported that U.S. spot Ether ETFs attracted $29.1 million on Thursday, after smaller inflows the day before. The message is not broad altcoin euphoria. It is targeted rotation into specific stories. On-chain and exchange flow data also mattered. Cointelegraph reported that Binance recorded about $1.23 billion in weekly net outflows, while Ethereum withdrawals reached a 3-year high. Crypto.news also reported monthly Binance exits near $3.2 billion. This is important, but it is not automatically bullish. Exchange outflows can mean accumulation, self-custody, regulatory caution, or short-term positioning around a rebound. The correct label is important flow signal, not a guaranteed market direction. The clearest sector story was real-world assets, especially tokenized equities. Solana Floor reported that Solana had its largest week on record for tokenized equities, with weekly trading volume near $1.36 billion and about 96% of tokenized stock trading volume across chains. The Wall Street Journal reported that Securitize rose in its New York Stock Exchange debut and is expected to raise $400 million after its SPAC merger. This matters because RWA is moving from narrative to measurable market activity. For holder concentration, the most visible Bubblemaps item this week was the lab controversy on Intel Desk, opened on July 3. The case lists questions around insider ownership, over-the-counter deals, market makers, and exchange activity. This is a developing risk watch item, not a confirmed top 100 token headline. The lesson is important: wallet clusters can reveal concentration risk, but wallet ownership should not be guessed without public evidence. For next week, watch 4 things. First, whether the Bitcoin ETF inflow rebound continues or fades. Second, whether stablecoin supply starts expanding again. Third, whether exchange outflows reduce sell pressure or simply signal more volatility. Fourth, whether RWA and tokenized equity volumes stay high after the first wave of excitement. The market improved late in the week, but confirmation still matters more than hype. That was your weekly crypto and macro news brief. Stay informed, verify sources, and manage risk. This video is educational news only, and it is not financial advice.